Your engine dies on the highway. You have full coverage, so you're fine, right? Your insurer pays exactly zero. That's not a scam. Those two words just don't mean what you think. Here's the strange part. Search your actual policy documents, and the phrase full coverage appears 0 times. It's not a product. It's shorthand that agents and lenders use for one specific bundle, and that bundle has holes. So what did you actually buy? 3 separate coverages stacked together. First, liability. That pays for what you do to others. Their car, their medical bills. Never yours. Second, collision. That repairs your car after a crash, no matter who caused it. And third, comprehensive. That handles theft, weather, fire, and animals. Roughly everything that can happen to a parked car. Quick quiz, because this decides which deductible you pay. You hit a pothole? Collision. You back into a pole? Still collision. But a deer jumping into your bumper? That's comprehensive. Hail denting the hood? Comprehensive again. 2 coverages and often 2 different deductibles. And yes, the deer thing matters. Animal strikes count as comprehensive claims, which is why they typically won't raise your rate the way an at-fault crash does. Small detail, real money. Now the part nobody says out loud. Even with all 3 coverages in place, there's a list of everyday disasters your full coverage will not touch. Some get expensive fast. An engine breakdown? Not covered. That's warranty territory, not insurance. The laptop stolen out of your back seat? Also not covered. Your renter's or home policy handles belongings. A rental while yours sits in the shop? Add-on only. Rental reimbursement runs a few dollars a month. And a loan bigger than the payout when your car's totaled? Not covered either. That difference is yours, unless you carry gap coverage. That first one surprises people the most. Insurance covers sudden events, crashes, theft, storms. Anything that wears out or simply breaks was never insurance's job, no matter how much you pay. One more catch. Even when full coverage does pay, you pay first. A typical deductible runs $500 to $1,000, and collision and comprehensive each have their own. Full coverage was never first dollar coverage. Here's an illustrative example. Dana finances a new SUV and totals it a year later. Insurance pays market value, roughly $19,000. The loan balance is $23,000. So Dana owes about $4,000 on a car that no longer exists, with full coverage. Gap coverage, often just a few dollars a month, exists for exactly this moment. So here's your 5-minute audit. Pull up your declarations page. That 1-page summary is the only version of your policy that really counts. Note both deductibles, collision, and comprehensive, and be honest about whether you could pay them tomorrow. Then check rental and gap, and if you're financing a newer car, gap is the box I'd look at first. So full coverage really means 3 coverages, and a few famous holes. Now you know exactly where they are. Subscribe, because next time I'm ranking the policy add-ons that are actually worth your money.